Well, hello again, my friends, and welcome to another episode of This Week in Tampa Bay Housing for the week ending November 5th, 2022. I'm here today in beautiful Fred Howard Park in Tarpon Springs, Florida. And while our friends up north are starting to feel the cold as winter is upon them, or it will be shortly, I'm here in shirt sleeves here in Tampa, and I'm enjoying the beach. So let's get right to the numbers for the combined counties of Pasco, Pinellas, and Hillsborough for the 7-day period ending November 5th, 2022. For this period, there were 10,968 active residential properties available for sale. This represents an increase of 299 homes from just last week and 946 homes from just last month. That's an increase of 8.6% month over month. Now, this is traditionally a very slow time of the year for us, with homes coming on the market at a very slow pace. However, this year it's a bit different. Sellers are continuing to put their homes on the market at a rapid pace, which means more competition for those properties already listed for sale. Seller inventory is increasing as the housing market continues to shift. This week, as we look at the market, 1,123 new listings entered. We had 1,904 listings that had price reductions. That's an indication that the market is simply not accepting the price that the homes were listed at, and sellers decided to drop the price. This represents 17.4% of the homes available on the market having a price decrease last week, which means that about 1 in 6 active listings reduced their price. This is much different than we were seeing just a few short months ago. 1,069 listings went under contract for a closing date sometime later in the future. 1,027 properties actually closed. Now, to simplify this, it means that more homes are entering the market and less homes are actually selling. Interest rates for a 30-year fixed-rate mortgage, according to Freddie Mac last week, averaged 6.95%, down by 0.13% over the prior week, but still up considerably from the January 2022 low of 3.22% as concerns about the recession continue to rise. Now, to put this in perspective, in January 2022 at 3.22%, the monthly payment for a 30-year, $300,000 mortgage would have been $1,301. At today's rate of 6.95%, the monthly payment for that same $300,000 mortgage would be $1,986 for a difference of $685 per month. Now, this past week, in an effort to slow inflation, the Fed once again raised interest rates by 0.75% and is talking about continuing to raise those rates again soon in an effort to still continue to slow down inflation. And while the Fed rate's not directly tied to mortgage rates, it's possible that mortgage rates could rise in the near future because of this decision. Now, in last month's update, we mentioned that the experts were predicting mortgage rates to rise to 7% in the next month, with the possibility of rates at 8, 9, or even 10% in the future. Guess what, folks? We're here. And Wall Street analysts are predicting a decline in housing prices for the coming year from 5 to 15%, as the graph indicates. Interesting times indeed. Now, if you're interested in getting more information about your specific home and neighborhood, please reach out to us and we'll be happy to prepare a detailed market analysis tailored directly for your unique situation. This is Paul with Team Vergadamo and eXp Realty. Now, if you've been enjoying our weekly market updates, please share with your friends and subscribe to our Team Vergadamo YouTube channel, where you will see a wealth of information about Tampa Bay, and you'll never miss another one of our updates. And remember, it's so very important in these times of economic uncertainty that if you are thinking about selling or buying a home, you do need the advice of a real estate expert, and that's where we come in, because who you hire truly matters. Thanks again for watching and have a great week. We'll see you soon.